Hey, this is Bubble Analytics, and this week's attempt at financial wizardry comes in the form of a very basic but quite effective moving average strategy. The averages we're going to be using this week are the exponential moving averages for the 9 period and the 31 period. And we're going to be using the averages both to identify the trend, bullish and bearish trend, and also time our entries and exits. And we won't be using any other indicator. So for bullish trend, that would be just EMA-9 above EMA-31. For bearish trend, it would be EMA-9 trading below EMA-31. And then for our sell signal, what we'd be looking for is a price close back above the short moving average, EMA-9, followed by a close back below it. And for our buy signal, we'd be looking for a price close below EMA-9 and then back above. So our averages identify bullish and bearish trend, dictating what kind of trade we can take, and then a price recapture of the shorter moving average dictates when we actually enter and exit the market. So with that in mind, if you are ready to start coding it up, please read the disclaimer. Okay, let's code this one up then. So to begin, I've opened up a fresh Jupyter notebook, which I am going to rename MAs. And I'm going to create a few empty cells just by clicking in the first and hitting Shift Return. And to save a little bit of time, we're going to be pasting from our template. The template contains code snippets, stuff that we would use each time to create a strategy and then backtest it. And both the completed notebook that we produced today plus the template is available to download from the website. Link is in our GitHub profile. The link is in the footer there. So let's get going then. So first job, as always, is to import our libraries. The libraries come with pre-built functionality you can make use of to achieve whatever it is your coding goal is. In our case, obviously these are to do with backtesting. So I'll just paste that in there and hit Shift Return just to run it. Next step would be to download some data, and as usual we're going to start with data on the QQQ daily time frame. Once you've pasted that in there, if you hit Shift Return, this is what the output should look like. And the key line is the one at the top. So we are using the Y Finance library, which we renamed YF, using its download method, which takes 3 parameters at a minimum. So you need to tell it the ticker, the period of time you want to download for, and the time frame. So in our case, what we're saying is, please download 10 years worth of daily time frame data for QQQ and store it in a file called df, or a variable called df. Then if you want to have a look at what's in your variable, just type the variable name, click Shift Return. This is what it looks like in raw format, and effectively if you take it line by line, you can see that I'll tell you what, I went a bit quick there, didn't I? So if you go line by line, this is what it looks like in raw format. This first line here, what it's going to do is flatten the header a little bit. So we're going to get rid of the superfluous column names that we don't need, so that middle line. So get rid of that first. And then the second line here is going to split price and date so that they're in their own columns. And that should have the effect of flattening the column name, so it looks more like an Excel file now. So price is now the index with the row numbers here on the left hand side. And then we have date in our date column, but even though it looks like a date, it's actually a number string. So if you were to, or if you wanted to use the date column for anything, which we will be using when we create our chart in a bit, but if you wanted to use the date column as a date, you would need to first convert it into a date time format, which is what this line does here. So effectively it's just taking in the date column and then using pandas library to convert it to a date time format. And then finally, because we don't need it for this strategy, I'm going to delete the volume column, and so we end up with this. So that's our data downloaded and ready to go. So let's create our exponential moving averages. So to do that, I'm going to create 2 new columns within our data frame here. So we're going to have one for EMA-9, one for EMA-31. So to do that, I'm going to tell it which data frame we're going to be adding this to. So df, and then the name of the column I want to create, EMA-9, and that is equal to an exponential moving average 9 periods of the close column. So we're going to tell it to use the close column, so df.close, and then use the exponential moving average method, which is EWM. And then for its look back period, you have to tell it which span that you're looking for. So span in this case is equal to 9, because we want to create the 9 period exponential moving average. And then once we have those values from there, we're going to create the average, the mean. So that's EMA 9. Let's do the same thing for EMA 31. So I'm just going to change the column name here and the look back period. And then what we'll do is run it and call our variable to see what the data frame looks like now. So there we go. So we've got our nice OHLC data here and our 2 new columns with EMA 9 and EMA 31. So next step then would be to create a chart displaying that. I'm just going to get rid of that. And so I'm going to come back into my template now, and for this one, because we're not going to have an indicator underneath price, we don't need this section here, we don't need to make any subplots. Instead, we're just going to import the price data like this. So we're just going to take this code block here, and I will leave a bit of a gap. This is where we're going to create our signal function in a minute, but let's add that in there. And then what else are we going to need? So we want to display a slice of our data so that we can say, please show us the first 500 bars or the last 300 bars, that kind of thing. So that's what this bit here does. And then what we are going to do is overlay the values from our EMA 9 and EMA 31, these columns. What we're going to do is overlay those onto our chart. So if we go back into our template here, you should find something for overlay, which is here. So I'm going to add a trace, tell it to find the data in the EMA 9 column for that one and the EMA 31 column for that. So I'm just going to amend this slightly, adding EMA 9 in here, EMA 31 in there, and then should give it a name really, and EMA 31 in here. Okay, and then you can play around with the colors. I'm just going to pick white for the white for the EMA 9 and gold for EMA 31. So once we've got that, so we've got price now imported, and we've got the values from our EMA 9 and EMA 31. They're imported as well and overlaid onto price. So let's then render our chart. So I'm going to grab this entire section here and paste that in, and then we're going to play around with it. So I'm not keep this line if you want to save the image wherever your code book is stored. So you just name it. So it'd be like MA strategy.png, and then scale just governs how crisp you want the chart to render. The bigger the number, the more clean it is, but also the bigger the file size. But I don't need that today, so I'm going to get rid of it. This part is updating the x-axis where we want to display a month and year. So when Plotly renders this data, it doesn't understand that there's no data on a Saturday and Sunday. So what we're doing here is telling it to ignore any data between Saturday up until Monday. So effectively get rid of Saturday and Sunday. And then these little bits here, all they're doing is governing the grid line color, and this part here, the width and height of your chart, and the template that you want to use effectively. So before I run it, the last thing that you want to do is set the date column as the index. So that's the bit I'm going to do here, and I'm just going to put that above. And now if I run all this, probably twice because Plotly takes a little while to, yeah, there you go. If I run that again, there we go. So now we've got price above QQQ, and then EMA 9, which is here in white, and EMA 31, which is here in gold. So our strategy then is to let the moving averages tell us what the trend is. So when white is above gold, as in EMA 9 is above EMA 31, we consider that to be a bullish omen, and we're looking for long positions only. And then when we get a subsequent close back below EMA9 and then a close above it again, so a pullback and then a move higher, that was our trigger to get long. Let's have a look. We are okay, so we're displaying data here from the start of the, if you have a look down at the x-axis, we're starting in June 2016 here. So let's go and grab some data from, so we've got 2,515 rows. So what I will do is make that 315 and that 2200. So we're going to start from bar 2200, displaying the last 315 rows there, just so that we can have a look at more recent data. So yeah, there we go. So what we're looking at then, if I sort of zoom in a little bit, what we're looking for is for a bearish trend, white should be below gold, so EMA9 below EMA31, and then our trigger to get short would be a close above EMA9 followed by a close back below it, which I think is probably going to be there. So close above this bar, close back below that bar, so that is very likely going to be a sell signal there. And then on the long side, once white is above gold, so EMA9 above EMA31, a pullback that closes underneath EMA9 and then back above is a buy signal, so that's very likely going to be a buy signal around there as well. So let's code that up then, and I'm just going to create another little I don't know why that didn't do that, but there we go. Right, so I'm just going to create another bit of space there. So we're going to go and grab our signal function, which is here, and all this does is create a function that runs through our data frame line by line, looking for our buy and sell parameters to be hit. So the signal function initializes a variable called signal, which is the same length as our data frame and pre-populated with zeros. And then this part here runs a loop on the length of the data frame. And where it sees our buy parameters, it puts a 1 in that signal column. Where it sees our sell parameters, it puts a 2 there, and if it doesn't see anything, it just has a 0, and then this creates a column within data frame called signal, within DF called signal, and from there, so first for a buy signal then, so the first parameter is EMA9 has to be above EMA31, so that's the first thing that we do. So data.EMA9 .ilock I, so I is representative of the current bar, I minus 1 is yesterday's bar, I minus 2 is 2 days before the current bar, and so on and so forth. So data.ema9.ilock I is effectively saying today's value of EMA9, so that has to be above data.ema31.ilock I, so same thing, so the EMA9 has to be above EMA31, today's bars, and then we are looking for a pullback. So if I'll see if I can squeeze in on one line, but I'm not sure I will be able to. So if the close yesterday, so close yesterday would be .ilock I minus 1 was below EMA9. .ilock I minus 1, and see, I knew we wouldn't get it in. Right, so to split it over multiple lines, which is sometimes easier to read, just need an and sign and a backslash to tell it to go on a new line. And then just do that. And if I add the same thing in here, what we'll do is this. So data.close today, ilock I. So the current close is greater than the EMA9 today. That would be our signal to get long. So if I run that, let's just see if that's worked. Good. So we've generated a signal column. Let's just go and see whether we actually got any buy signals in the last 40. So I'm going to take the tail, so the tail end of the data set, the last 40 rows, and we didn't get a buy signal. Oh, never mind. So I'll show you on the chart instead. So that is our bullish signal. So EMA9 has to be above EMA31, and then yesterday's close was underneath EMA9, and today's close is back above it. That is our signal to get long. We're going to copy this entire thing and just reverse it for the sell signal. So where it sees that, obviously it puts a 1 in the signal column. So let's go and do the same thing but in reverse for the sell signal. So to get short, EMA9 has to be underneath EMA31, and yesterday's close should be above EMA9, and today's close should be back below it. And if we run that now, we should have our signal column. And to visualize that on the chart, then I'm going to come back into our template and take this little bit. So all this is doing is creating a function that looks through our signal column, and where it sees a 1, it returns the value of the low, so the low price minus an offset. And where it sees a signal equals 2, as in a sell signal, it returns the value in the high column plus an offset, and then creates 2 new columns within our data frame, one for long entries, one for short entries, so that Plotly knows where to put our little markers. So I won't run that yet. I'm just going to come back into my chart setting here, and you see under entries, this is where we add the data from our long entries and short entries columns that we just created there. So I'm going to add that in the chart settings bit. So effectively it's going to take in the value from long entries column, add a marker, which will be size 7, an arrow up and white. And then for a short entry, so take the short entries column, create a marker, size 7, and make it a gold cross. You can vary that as much as you want. So if I now run all this again, and have I made any mistakes? No. Okay. So where we were looking for a sell signal, we got one. So remember how we were looking at this part here. So white is below gold, close back above, close back below. That's our signal to get short. You'd have been shorting from here and looking for a profit. And then on the buy side, similar sort of thing. White is above gold, pull back underneath EMA9, close back above. That is your signal to get long and look for a quick profit. So that seems to be working fine. This section here, all this is doing is telling you how many signals you got, basically. So we had 138 buy signals, signal equals 1, and 55 sell signals, signal equals 2, and that's actually pretty healthy. So obviously if you're not getting enough buy or sell signals, you know immediately from this to go back and amend your strategy. So no point in going much further forward if you've only got 14 buy or sell signals, for example. So, but let's now get onto the backtest part of it. So I'm going to come into my template again, and I'm just going to pull this entire section. So here we go. I'm going to pop that in there, and to save a bit of time, I'm going to set this up a bit quicker. I'm going to grab this section as well for the profit and loss graph, and I'm also going to add in the Monte Carlo simulation. Okay, so that way when we run it, we can just go and have a look at it. And then I'm just very quickly going to amend this. I don't want to save the image, so I'm going to get rid of that right image statement there. It is a MA strategy Monte Carlo simulation. And then same thing here. I don't want to save the chart image. And I want to play with the title. So MA strategy. Oh, don't need that. So P&L. So for the first of all, for the backtest then. So the backtest, all it does is take in the values from our signal column and then creates a strategy class called MyStrat, which it initializes here and then pulls in the values from that signal column. And then this part is the important bit. So if your signal is 1, as in a buy signal, if you've got a short position open, close it. Or if you don't have a position, either way, go long, self.buy, go long with a size equal to 99% of available capital. And then if your signal is 2, if you're already long, close that position, or if you don't have a position open, get short, self.sell with 99% of available capital. This part here is if you wanted to set a time limit, so you could have profit and loss targets set up for your buy and sell. So you say, okay, if if you have a 5% profit target, 5% stop. But if you haven't hit either of those in 5 days, please sell. And you can keep that in. We're not going to use that today, but and then these sections down here are parameters for your backtest. We're not going to trade on close. We're not going to need hedging. We're going to trade on the open price following a buy or sell signal, and we're only going to have one open position at a time, so exclusive orders equals true. Commission set here at 0.0005 just means you pay 0.1% fees on a round trip, so that's a buy and a sell. Margin equals 1 is just saying use no leverage, and starting cash is 100 grand. We're going to be looking at the MyStrat strategy class and taking data from DF. So, and that is it. So if we run all that raw, we'll have a look at the stats first. If we run all that raw, you can see we're in the market near enough 100% of the time. We make a paltry 42% return versus buy and hold 612. Our drawdown is not very good at all. We don't really get enough trades. And our worst trade was 13%. Our best trade, even though that looks good at 50%, just tells you that you're not buying and selling enough. And the reason for that is that you don't have any stops or losses. So effectively, what's happening here is, say for example, there's probably a buy signal around there, but say for example, you get short here, so that's a sell signal, so we get short. You're not taking any profit on that short. The only time you're closing that short is when you get a corresponding buy signal, which came here. So that would actually be a loss, even though it would have been a good trade. And then you'd be getting along here and holding that all the way up until here when you get a corresponding sell signal. So you're just not trading enough. So the way to sort of combat that is just to add some profit and loss targets, which is what we're going to do now. So typically for any sort of strategy, I would separate them out to start. So I want to keep this section here. So if we're short, then I want a buy signal to get me out of that short, but I'm not going to buy anything just for the time being. I want to have a look at what happens on the short side only. So at the short side is probably where a lot of the damage comes in this strategy. You can see that if you ran this raw, so waiting for a buy signal to get you out of a sell signal, you would lose 57%. You're in the market a quarter of the time, losing 57%. Huge drawdown. Only 16 trades, of which you win very little. Not great at all. So first thing we're going to do is add some stops and losses. With a strategy like this, typically I would have a short stop and quite a big profit target. So occasionally you're going to win quite big with that because it's these ones here that are probably going to make you money. So for example, this one here, it's a great short and you probably make quite a bit on that one. But these ones, we only dip temporarily before eventually reversing higher. On the short side, a lot of the time that's going to happen. So you want a tight stop so that you're not getting absolutely smashed with these ones, but quite a long. To take advantage of this, we want quite a long profit target. So for that then, we're going to key from this price here. So basically that takes the close price, yesterday's close price, and we're going to key from that to set our stop. So I'm first of all going to set a stop loss of 1%. So that would be 1.01 times that price level. And then I'm going to set a take profit. So TP, and I'm going to put that quite loose, I think. So, and that is going to be 6.5%. I think we came up for this one. So basically, this one is going to be 1% stop loss and a take profit target of 6.5%. And we're going to hope that makes us a little bit of money, which it does. So, and on the short side, it's not as easy as you think to make. So anytime you get even a small return on a short side, bearing in mind that you compound your returns in a strategy like this, it adds quite a bit to the end result. So you made 29%, even though you're in the market only 6% at the time. The drawdown pretty large for that length of time, and you can see the win rate is awful, and that is going to impact massively your win rate your overall win rate when we add in the buy signals in a minute. But we had 49 trades. We lose 75% of those trades, but we make profit because occasionally we make 6.5%. So anyway, let's add in the long side of it. And to do that, what we're going to set is, looking at our chart, you can see that in good runs, you can go for quite a big target, because one thing that this strategy is slow to spot the change in trend. So the change in trend comes here, even though the low came here, the change in trend came there. It's slow to spot that, but when it finally gets going, as long as it holds for a relatively decent length of time, you could have a profit target quite high up in there. But so we're going to go for, normally I'd start with 3% for the Qs, but we're going to pick 5% for this one. And just like on the short side, we're going to set a stop here, because it is, if the trend moves against you, you could be holding that position a long time before you get a buy signal. So if you have a look at this downtrend here, we get the change in trend indicated here, but our first sell signal doesn't come until we get that pullback. So if you had a short, sharp downturn in the markets and you were holding along from here, say, you're going to be holding that for a long time until you get a corresponding sell signal. So we're going to put a stop in place for this one, and I'm going to put one at 97% of that price above, so a 3% stop. And if we now run that, you can see that we do pretty good. We're in the market 44% of the time. Our return is 289%. Our drawdown is fairly low, so not bad. We have 116 trades, so enough to have a reasonable amount of statistical relevance. You'd want a few more, to be honest. The win rate is only 45%, but it's the short side that kills you on that strategy. On the long side, I would imagine that's making quite a bit of money. In fact, let's go and have a look. Oh, our win rate's a lot higher. So if you have a look on the long side, yeah, you can see 60% on the long side. So it's the short side that's killing you on the win rate. So, but we would ignore that, because we've got a reasonably decent drawdown metric here, and our worst trades only 4.5% due to our stops. So we're quite controlled. So if we run that whole thing, now we're going to have a look at our P&L and our Monte Carlo simulation. So for the P&L, all we're doing here is taking in the actual trades from our stats. So from our stats here, the list of actual trades, so when they bought, when they sold, and what the result was. And then we're creating a cumulative P&L by taking the P&L from the trades and then using the CumSum method, cumulative sum method. And then we're representing this on our chart here. So we're using, again, Plotly to do that. And this gives us our P&L here, which is actually not bad. So really good for the first sort of four odd years, up until we got to the accused bear market, where we had our first sort of big pullback, taking us from 190 to 142 there. And then it's been kind of choppy ever since. And choppiness generally means not trend-less, but a choppy market that's prone to moving up and down, and we've kind of had that in the last sort of 5 years. But so that's the moving average strategy. Let's go and have a look at the Monte Carlo simulation. What this is doing is, rather than looking at a profit and loss, it is looking at the percent return for each trade. So again, it's looking at the trades, the list of trades, when they bought, when they sold, and what the result was. It's taking in the return percentage here. And then this function here is taking the list of those trades and randomizing the order 100 times, and then displaying each on the same chart using Plotly here. So basically what this is showing you is what would happen if all of your losing trades came at the start. And so you can see your worst strategy performance here. You were 20% down in the first 20 trades, 19 trades. So not bad, not too bad really, and you wouldn't really get into much trouble with this strategy, because you've got collars on it, so you've got stops and losses. So you're not really going to get into massive amounts of trouble, and you've got a drawdown that is quite reasonable, really, bearing in mind that the Qs have dipped 40%, I think, in 2021 into 2022, or somewhere near that, 35 to 40%. So bearing in mind that we are kind of safe on the strategy, could we use leverage? And the answer is, yeah, I'd say so, but we would never recommend it. So if I want 2-to-1 leverage, I just change my margin here to 1/2. If I run that again, you'll see the return jumps hugely. So you would have doubled the market return. Same win rate and number of trades, same worst trade even, but your drawdown is obviously increased because of the leverage. Your time in the market is just as good as it was. So, but the leverage obviously impacts your drawdown there. So really good overall strategy, and if you wanted to use a bit of leverage with it, you probably could. I probably won't do that when we write this one up for the blog. So, but that is it. So really simple strategy. It is late to the party. What could you change really about the strategy? Well, obviously the moving average is probably the only thing that you want to play with, and definitely the stops and losses, because I didn't really have a huge look at that. I just got it to a position where it was fairly healthy in the strategy, so you probably play with that. If you have any questions about this or anything else or our services, feel free to email. It's info@bubble-analytics.com. Thanks now. Bye bye.